I remember watching Danny DeVito's movie, Other People's Money, as a kid, and I imagined trading in stocks to be glamorous and badass. I thought stockbrokers had the opportunity to be the richest guys around, and I often wondered why they weren't. Years later, I read about a comparison that was done between stock portfolios managed by experts and those managed by everyday people like me. Apparently, those managed by regular people perform just as good, if not better, than those managed by expert traders. This motivated me to start my own journey to building my stock portfolio. But first, I had to learn what made a good stock. In this video, I'll be sharing the 5 key traits of a winning stock. Those are the characteristics that I look out for when deciding which stocks to buy out of the myriad of options on the stock market. A good company should have all these characteristics. That way you can set and forget once you've bought the shares. At the end of this video, I'll be sharing my own best resources for tracking and managing your investments in the stock market online. Before we go on, I'd like to remind you to make sure to subscribe to this channel. I'll be making more videos on how to manage and grow your money and investments in general, and I'm sure you don't want to miss them. So go ahead and also click on the little bell icon so you'll receive notifications immediately new videos come out. Done? Alright, cool. Let's go. The first thing to look out for in a good company to invest in is its size. I know a lot of people like to target penny stocks, that's cheap stocks that can be sold when their prices go up. But I'm not referring to the price of the company, at least not yet. I'm referring to the size of its assets. When choosing a company to invest in, you need to make sure it's strong enough to withstand the inevitable upheavals that every economy goes through. To do this, check for the company's asset base. I'll show you where to find this information at the end of the video. But as a rule, I usually buy shares in companies with total assets worth at least $250 million or with annual revenue of $500 million. This helps weed out a lot of options and reduces your choice to companies that we are at least 80% certain will still be existing in another 10 years. You'll notice the Nigerian banking sector was one of the few to actually turn a profit during the 2016 recession. This is largely due to the recapitalization exercise that happened in that sector 10 years earlier and that forced them to beef up their asset base. The next thing I look out for in a company is its working capital. You know the saying that cash is king? Well, working capital is an indication that a company has enough funds or cash flow to stay in business for the short term. Usually it's the difference between the company's current assets and its current liabilities. Some big companies have poor working capital and continue to stay in business based on their reputation or the willingness of their vendors to allow them to continue to owe. This is a risky position, and a shake-up in the economy can put such a company out of business. It's a lot. To confirm a company's liquidity position, you need to see its financials. I'll show you how to check for this. Now it gets interesting. The earlier points were more on the sustainability of the business, its working capital, its asset base, annual turnover. The next two are about the sustainability of its profits and support from its investors. The third criteria is profit. There are 2 questions you need to ask when checking out a company's profit. Has the company consistently made profit over the past 5 years? And has the profit been growing over the past 5 years? It's one thing for them to make profit, but it could have actually been declining. A good company will not only have made profit consistently every year for the past 5 years, it would have been increasing the profit at an average annual growth rate of at least about 3% over a 5-year period. Lots of companies on the Nigerian stock market have grown profits way more than that, so it's not that difficult to find companies that meet this criteria. Some companies though are inconsistent with their profits. Others have declining profits. I don't go for such companies. There are lots of others to choose from. The fourth criteria is dividend payments. A good company will pay dividends consistently to its shareholders over a 5-year period. While it follows that a company would pay dividends when it makes profit, that's not always the case. Some companies retain all their profits and reinvest in the business. That sounds nice, but I like my investments to pay dividends. On the other hand, you shouldn't assume that a company that pays dividends has always made profits either. Some companies pay dividends even when they make losses. I don't consider those good investments either, so we need to check for both. The final criteria is the price of the stock. A company that satisfies the first 4 conditions is usually a great option to invest in. However, it may be overpriced on the market. What you want to do is find good companies that are currently underpriced. Why? because usually over time the market will catch up to the fair price of every stock on the exchange. This means that if a company is already overpriced, there's a good chance that the price will drop in the future, even if it's a good company. However, if a company is underpriced, the value of your investment can only grow over time. You can comfortably ignore any temporary fluctuations in the price. There are two ways I usually use to determine if the company is fairly priced. Number one, there's something called the price to book ratio. This is when you compare the stock price to the company's net assets. In other words, we're comparing the price people are willing to pay for the company's stock with the actual value of the company if it were to be sold off today. Ideally, this should not exceed a ratio of 1.5 to 1. In other words, a good company will be priced lower than 1.5 times its book value. The second consideration on the price is a company's price to earnings ratio. This basically compares the stock price to the company's earnings per share. In other words, how much profit the company made in the last financial year to the price it's being sold on the market today. Ideally, the stock price should be less than 15 times its profit per share. Otherwise, it's overpriced. A true penny stock is one that satisfies the earlier mentioned conditions and still remains underpriced. Most underpriced companies do not satisfy the first criteria of size though, so check the financials. So you're probably wondering, where do I get the financials Dupe keeps talking about? How do I check for all these criteria? How do I even get started at all? Let's start with the last question. I'll be making a video shortly that will go through step by step how to get started investing in the stock market. But to make it easy for you, I'll just say contact a stockbroker and open an account. Now, where do you get the financials and how do you figure out all these criteria? My first resource is the CSCS website, where you can check the latest stock prices and also register and track your stock portfolio online. The other resource that I usually use is the Nigerian Stock Exchange website, where you can check specific stock ratios or search for a company's latest audited financial results. I'll leave links to the exact pages on both websites because I know it can get a bit confusing trying to navigate your way to where this information is. There are also some stockbrokers that provide a 5-year summary of each company's performance on their website. I no longer use this as I prefer to read through the financials myself, but as a beginner, this can actually be a very useful resource as well. So I'll leave a link to that as well. But the most important tip I can leave with you today is to get started. Start with a small amount of money. Contact a stockbroker, find out the minimum amount you need to open a brokerage account, invest something today. And make sure to subscribe to my videos for more information on this. I'll be here to guide you every step of the way as you begin your journey into the world of investing. So stick around and let's have a good time together. So thanks for watching. Please leave a comment below and let me know what else you'd like to know about investing in the stock market. And also share this video with a friend. And remember, the most important thing is not just to accumulate information, it's actually to act on it. So let me know one thing you're gonna do about what you've learned here today. Cheers.